Hey everyone, welcome back to my channel today. I'm joined for the second time with the lovely Amy Richardson. We're going to be talking about tax, the changes that are going on in the UK. Are people setting off to Dubai because they want to save all that tax? Are there other locations? What's the scapegoat? What should we actually be considering when it comes to trying to mitigate as much tax? No one wants to pay tax. And we're going to be talking about finance and kind of general subjects around money. So stick around if you want to learn and improve your financial situation. Amy, second time round on the podcast. Thanks so much for being here.
Thank you, Aaron. It's a pleasure.
Awesome. Well, look, let's dive straight into it. Just as we were saying off air there, we see drastic, I was going to say dramatic, but it is dramatic and drastic changes when it comes to the UK and the taxes. I heard that Bournemouth is now going to be taxing UK residents for holiday tax down there. What's the situation at the moment? Because it seems to be changing rapidly and not for the
Yeah.
better. What's your take on it?
Yeah, so we know from recent budget changes and government changes, especially in the property area, as you know, I deal with a lot of landlords and entrepreneurs. That area specifically has been hit pretty hard. So we've seen the things like the reduction in multiple dwellings relief. So that's actually been abolished from the 1st of June or 31st of May. So that's a massive hit to property investors, developers, or any aspiring business owners that want to expand and maybe get into property. We've also seen the furnished holiday lets regime that's been scrapped. So where that used to be a tax loophole in a way, that's now being closed. And generally speaking, some of the more positive changes that the government have rolled out tend to be more towards employees and keeping people in jobs and out of entrepreneurship. So for an entrepreneur, a business owner, someone who's maybe started out in the last couple of years, would have been used to a lower corporation tax rate. And that has already changed now. So from the 1st of April 2023, that went up to an effective rate of 26.5% if you've got profits between 50 and 250k. So whilst we've had a little bit of leverage on national insurance and things like that, on the whole, they're taking more off us than they're giving us, which I think people are pretty privy to now. And because of the cost of living changes, obviously that's gone up massively. So people getting mere little pay rises with the NI changes, it's still not covering off the shortfall of what, the bare minimum of what I believe people should get. And going on to your Dubai or people moving out of the UK, the tax system has been a main driver for that.
Yeah.
Absolutely. So, cost of living, tax, the system as a whole, the way the UK is going, a lot of people now are potentially thinking about relocating permanently, which is a massive decision. A lot of people have families, etc., but they're literally getting to that point where they're like, it's just not working for us anymore. We need to go somewhere else.
So there's a few things to dive into here. And I think actually I like that take, what you've just spoken about there. And really, I think that's a bigger picture is the more benefits for employees,
Yeah.
bigger picture, let's keep people in the jobs. Let's keep people within the system and keeping that ticking over so people don't explore entrepreneurship. And that's really crippling. And that's such a shame because I was having a chat with Paul about this the other day. In entrepreneurship and business, yes, there are certain loopholes and you have more freedom and, I suppose the control of your own life, right? But essentially it's getting closer to just working for HMRC. That's what it seems like is you are employed by HMRC. That's an interesting take is that they're leaning it towards more benefits for the employee so
Yeah.
that remain in that job. That's interesting, which is obviously why a lot of business owners now are considering the Dubai move. I want to jump straight in and ask you, when's enough though? When do you think someone, because I was talking about this with Andrew Craig and he said ride the wave. It's really bad, but this is where people need to ride the wave. My take on it is, but at what point do you say, I'm being bent over backwards?
Yeah. I think you have to get to a certain level within business. So let's say, for example, you've got a business owner and they have blown up on TikTok or something like that. So they're making a net profit of £250,000 a year, for example. In that scenario, number one, that person probably hasn't got a young family or any real commitments to the UK. Number two, they're literally being taxed 25% on that £250,000 corporation tax. Then if they want to take it out as dividends, expensive lifestyle, shall we say, then they're going to pay a lot of dividend tax on that as well. So the actual tax is double for that entrepreneur if they're operating through a limited company. So for somebody like that, they would be more motivated to move to a country permanently, I use those words lightly, in order to save the tax and have the different lifestyle. So I do think a lot of this hinges on the person's actual situation, because what I tend to find is you may have, let's say, a business owner, married, got 2 children, they're in school in the UK, primary or maybe secondary. They are more likely to ride the wave, I find, in the UK, because it's the upheaval of moving everyone, move the family, their support network might be in the UK, etc., and they obviously need that. The more tax-driven jumps tend to be from people who can survive over in Dubai or wherever it is without, or they've already got a support network over there, they've got friends, family who are already out there, or someone who's kind of like young, free and single and free to do what they want. That's what I typically tend to see. But I have had some clients come to me, property investors and developers, and say, we're seriously looking at this because my portfolio's X million, we make this profit, and we want to enjoy some of those profits a bit more tax efficiently, and moving out to a different country is sometimes an option. But like I say, it depends on the personal circumstances of the person who's considering it.
I agree. No, I do. I think you have to take so much into consideration, and it is far easier for someone who doesn't have ties. I think the real hard thing when you're in business, right, is you're in quite a competitive world. And I had an interview most recently with Charlie Johnson. Now, although I'm not in the same industry as Charlie, so there is no direct competition, I totally get the context of which he was saying is that if you have 2 business owners who, let's say, are based online that can operate by Wi-Fi and, they're not tied demographically, the business owner who is operating from the UK is at such a disadvantage compared to the business owner that's operating out of Dubai, because what we're setting aside for tax and national insurance and corporation and all this kind of stuff, Charlie openly said it, what you save for your tax, I'm just putting into Facebook Meta ads. And I'm just reinvesting into the business. So it's also really hard for business owners to weigh up that decision, which is why I think people are really sitting down with their loved ones and going through and going, look, this is our future for the next 5-10 years. My business might not survive if I remain in the UK because my competitors are at such an advantage with the excess amount of capital that they've got. So I suppose it's a hard question for you to answer. We said off air, it's purely opinions, there's no advice. But what do you think the future holds for people in the UK that are trying to build businesses? And when we say ride the wave, I typically see when it goes up, it's never really going to decline. It's kind of, we're always on the up. So when we say ride the wave, what does that even mean? Like, is there the end?
My opinion on this is you rarely see it going the other way, where they're going to dramatically reduce taxes. Given that we've had worldwide events like COVID, pandemic, all this debt that the UK are in, etc., I personally don't think that there's going to be much movement, and hence why we haven't seen that in the budget announcement either. Obviously, we've got government things going on this year. That would be their chance to try and win people over as such, especially on the business owner side, or, trying to vamp up the UK in terms of, getting custom into the UK. But you can never say never. So we could have a government party in that does decide to err on the side of businesses, for example, more so. But personally, I can't see it. So I think people who choose to ride the wave, they're making that conscious decision, knowing that this is where we are at right now. It might get a little bit better, but I accept that this is the situation and I am okay with that. What I would say to people riding the wave is just make sure that you are utilising absolutely everything possible. The UK tax system is one of the most complicated systems in the world. So the chances are, there may be things that you can do to reduce that burden whilst you're still living in the UK. So my advice to anyone that does decide to stay here would be have a review of your finances, have a review of your home spend, what you need for your business to grow, what your business structure is, and what the future planning looks like for you as well in the UK. Because I think when you get that nailed, you'll feel a lot more confident that potentially you've made the right decision, and it's not just a money-driven decision to go out of the country. Also, we know countries like Dubai, they have started introducing some taxes now. So there's also no certainty on that side. Yes, it's nothing compared to the UK, but there's nothing to say that that won't go up in the future as well. It's a bit of a net neutral situation.
That's the tough thing, is like you never know what the bigger picture is, knowing that maybe when everyone flees to Dubai, they're going to be like, right, we've got a majority now, let's bump it up, because
Yeah.
there's a huge amount of infrastructure going out. And I've always asked myself, how's that going to be, the continuation of the funding of it? At some point, if they've got a lot of wealthy people, surely, and I have thought this, 5, 10 years down the line, are they going to then pull the trigger and say, right, we've got a lot of wealthy people, we want to start charging tax? But now they're all residents. It's not that easy for them to get up and go. Their businesses are settled. And I suppose that's kind of where I've weighed it up, is thinking, we have got a lot of people moving out there, but what does the next 5 years look like? And I think, again, review what you just said. I'd second that. Reviewing your finances, leaning up your lifestyle, living a little bit more frugally. I think, reinvesting more, because I know people like to generate profits and they like to go and spend it, and then they're not ready. I actually know someone who generates their profits, sets nothing aside for tax, and then tries to play catch up towards the end of the financial year. And I'm like, I wouldn't sleep. I wouldn't sleep if I lived like that. So I suppose, really, have we ever seen the tax situation as bad as what it is? Because it feels like that. It feels like we are being crippled left, right, and centre when you're alive and when you're dead. Has it
Yeah.
ever been as bad as what it is now? Because it feels like it's the worst.
I think so. For my clients in the property sector, they would have felt a real hit back in 2008 when we had the Labour government. And then it's just really carried on from there. So, I think there were probably times in the past, and if you go way back to like Margaret Thatcher days and things like that, then maybe that's some comparison. But equally, we are where we are today. Everyone knows the government are putting taxes up. So you can't control that. No one can control it. No one's got a crystal ball either. As much as somebody like me is close to the legislation and what's going on, we can kind of predict HMRC might do this, they might attack landlords, they might do this, they might do that, but there's no actual certainty in it. So there is an element of you just don't know. You have to be comfortable where you're at and where you're going. And also, just to back that up, what I think is more important than even the tax side is, do you know where you're going, what your goals are? Often people say to me, oh, I want £2 million portfolio business or whatever it might be, and I want £1 million profit. But when you actually start diving into the questions of, okay, why? Why do you want £1 million profit? What are you going to do with that money? People find it hard to explain. So I actually think start with the end in mind, have that conversation with your accountant, your tax advisor to say, well, actually, this is my magic number. It might be £500,000 profit each year, and then work out your tax plan from there. So I tend to find that's what people find more useful than let's just aim for the stars and, see where we get to. You definitely need a plan and then a tax plan to go with it.
Solid advice. I think the end in mind, we don't do that enough. A lot of people are plucking numbers out because of social media, and social media has done a great job of confusing people to what they actually want. It's funny you say that. I just want to bring something up. I'm sort of moving more into the education space and trying to sort of pass on what I've done and what I'm learning as I go and stuff like that. And it does amaze me, actually, the amount of people that will base their goals on what social media tells them is acceptable at a certain period during their life. And it's interesting, a lot of people are aiming for this 10, 15 and 20K because there are adverts everywhere for that specific number. But yet, when you actually dive into someone's finances, going back to you talking about the review, when most people live on the average about £1,600 a month take home, a lot of them don't realise that a lot of their comfortable numbers are in between £3,000 and £4,000 a month, which is far more achievable by generating maybe another stream of income, however that might be. And again, I think you hit the nail on the head. A lot of people don't know the end goal.
Mm-hmm.
And also, just something else which you mentioned there at the end, this comes up a lot with me. Aaron, should I hire an accountant? My answer is yes, always. Worth their weight in gold, a good one. Don't I
Yeah.
see people trying to do their own books and they get kerfuzzled and they're not sure. I'm like, dude, lady, offload it, outsource, give it to the professionals. I mean, that's the thing, right? I imagine your advice would be get an accountant because it makes sense.
Yeah, and it's not just the money side of things, it's the time side.
Yeah.
So let's say a client comes to me and they're like, "Oh, I don't need tax advice. I'm only just starting out. I just need you to do my year-end accounts." I will have a conversation with them, ask them a lot of questions. Turns out they probably do need some level of advice. It might not be that complicated, but they need some kind of guidance on the tax side. And then they might start the year-end accounting package, and then they get to the end of the year, haven't done the bookkeeping because they haven't had time, or they just find it too difficult. And at that point, we have the conversation about outsourcing that element. But what I think is more important is, let's think about you're a startup, day one, it's just you're doing everything. Now, as you grow and get more successful, you will have less time to do things. So if your cost per hour is more than what the average bookkeeper is, you should not be doing that task. So
Yeah.
and that goes across the board, not just for accounts and bookkeeping and things like that. If you are doing things that, a VA in the Philippines could do for $5 an hour, you are losing money.
Yeah.
So I think, have that operational commercial awareness of, okay, I started out like this. Maybe you've got to the point where you've left your job. So you were doing everything, left your job. At that point, start looking at what you can outsource, because eventually that means that you'll have more money to reinvest and grow the business further.
I think that's so important now, especially as everything going on, we're being sort of scrimped for everything, is the outsourcing of how cheap it is. We know how cheap it can be, right? Is outsourcing. And I think people are still holding on to a bit of old mentality of keep working on your weaknesses. You should pick the, wear that hat because you should be doing it. And it's like, well, actually, work on your strengths, outsource your freaking weaknesses for like a few quid a week or whatever it might be. I always
Yeah.
find it quite fascinating how people will still do their own books, but they don't see the value in an accountant. And I'm like, they'll save you tax, they'll answer all your questions, and the luxury of like QuickBooks. I know
Mm-hmm.
so many people that don't use QuickBooks or Zero or whatever it might be to log all the invoices and just let the accountant go in and do their thing. So
Yeah.
that's just that's an education thing, isn't it, really?
I think it's important to have financial well-being, know that your books are in order, be able to sleep at night knowing that you're paying the least amount of tax and knowing that you're compliant as well. Because there's a lot of people that will come to me when they're in such a mess. They've tried to do things themselves or they've left things too late, and it just causes them anxiety, stressing over money because they have, like, you said that person who basically spends the tax money, mate, they are going to be stressed. Like towards that deadline, they're going to be thinking, shit, how am I going to get this money? Etc. So I think it's really important to have not just the tax side, but the cash flow element as well, to say, well, okay, I get £1,000 in. I know I can't touch 20% of it. So
Yeah.
800 quid that go on marketing or whatever I need to do. And I think that's really, really important, because the stress and anxiety that not having that system in place can cause can be really damaging and actually stop the growth or hinder the growth in a business, because you're too busy worrying about how you're going to pay a supplier, pay HMRC, etc. So, but I think that's a really important point to make.
I think just to add here as well, for anyone listening, also most banks now, or certainly most of the online banks, all have tax pots that you can set up. So I would actually say to anyone watching, if you're opening up something like Starling or Monzo are great for it, is that you can just set up the tax pot. And I would always be conservative as well. Like when you're setting aside 20%, just set aside 24%. Like cover yourself, just have that little bit of extra going into your your tax and for your national insurance. Now, a question that comes up quite a lot, Amy, and I'm sure you get this all the time, is, and I think the answer's changed, which is what we were just talking about before we started, is I think if you can live more frugal and you can save more and you can live on less but start investing more and stuff like this, people can remain in a sole trading position for longer now, rather than, when people start companies, their first question is, oh, right, what's my name for my limited company? And should I get the limited company open and stuff like that? And then it just sits dormant for a while. So has it changed in terms of, Are you seeing more people go sole trader for a little bit longer before they go into a full-blown limited? This podcast was sponsored by the Employment Breakout Program, How to Fire Your Boss and Replace Your Income. If you want a life of purpose, one with time freedom and financial stability, head to the description below where you can join a free introduction webinar to learn how business could change your life.
So I'll talk about general businesses and not property because that's very different, as we know. The answer, in essence, is yes. We are seeing people either de-envelope from being a limited company and going back to sole trade, or stay in sole trade for a little bit longer. But that's only really for people in a certain profit bracket. So once you go beyond that profit bracket, let's say it's 100,000, and you say, well, I'm comfortable getting 50k out salary and dividends, most tax efficient way to pull money out of the company, and the rest of it I'm just going to reinvest. At that point, the company is more than likely going to be more tax efficient for you. But if you're hovering, let's say, between 20k up to 80k profit, then perhaps you may be better off as a sole trader. But again, it depends what you're doing. If you're going to spend all that money, yes, probably sole trader, because if you withdraw it all out as dividends, there'd be quite high dividend tax to pay. So we have seen a little bit of a shift, but it tends to be people who are in that profit bracket. And also what I find, if you have someone who's very clear on where they are going and what they want to achieve, they will still choose limited company from the start because they know that's where they're going to ultimately end up. And that's the right decision for them. So I do still think it's a personal choice based on personal circumstances. But if you were just looking at the profit element, then the average general business owner, say a salon owner or somebody like that, then yes, you'd probably be better off as a sole trade, depending on the level of profits that you have.
And do you think we'll ever see the threshold for 40% move up to that 80,000? I know a little while ago, Boris was
No,
giving it a big. No, I don't either. And it's disappointing, really, but you don't ever think that will ever come into play. Again, it just gives people more wiggle room, but I don't think it will, but I know that it was spoken about. Is that nothing that could be on the horizon?
I don't think so. I would be shocked if that happened. I mean, it'd be great, obviously, for some people if it did, but if we look at the current situation and what they've kind of tried to entice people with, it's nowhere near that sexy. So I can't personally see that happening at all.
What's your thoughts on Rishi Sunak? I'm mixed. Very, very mixed.
I'm going to say very little.
Mm, yeah.
I'd say mixed as well. To be honest, my opinion on all politicians is pretty much the same. So I don't really believe what they come out with. I do believe there's a wider system in place above the government, and that can dictate what happens in the world and with the governments and taxes and things like that. Because I know I can't control what the government are going to do, say, lie to us about, whatever, then I don't actually take much notice.
Yeah.
So my opinion is kind of very neutral. Like, I don't dislike the guy and I don't really like the guy. At the end of the day, as a tax advisor for my clients, I can only hope the best results for them.
Yeah.
But who actually delivers them, who knows?
I'd second. I don't take any notice. I have to remain in my own bubble because otherwise, it's outside my own bubble. There's nothing but frustration and annoyment from these people.
I think people get consumed by it, just waste time
Oh yeah,
scrolling on TikTok or wherever. Oh, this is going to happen. This might happen. Yeah, but it hasn't happened. Stop watching the news. I literally stopped watching it years ago.
yeah,
I get my tax updates from my professional body. I know they're, on point and up to date. There's no reason, in my opinion, for anyone to watch the news. It just depresses you, feeds you loads of bullshit. Yeah, I've got quite a strong point of view on that. But I just think it's a waste of time. Like, you could be building your business. If you've got a job, stick YouTube on whilst you're cooking the tea or whatever you're doing. Absorb information from people who are where you want to be, not don't watch the news.
I'm right there with you. I've done many YouTube videos on why you should not watch the news and the dramatic effects it can have on your mental health. But like you said, people get absolutely consumed. Just while we're on this, I've done quite a few videos on the cost of living crisis. And it's something that does really irritate me. because it's, for me, it's very plain and simple. There is no cost of living crisis. There is just a cost of living. And the
Yeah.
last 100 financial years will tell you that on a chart. It's just people don't plan for the dips. And what does irritate me is it's the people that get consumed by all this propaganda and all the news and the scarcity and the fear mongering and everything that's driven with an agenda. If you go into your local city centre, and there was a point earlier on in the year, I went to 6 city centres around the UK in a very short period of time. It was about 13 weeks. Every one of them was rammed. You know, I've booked
Yeah.
holidays recently. I had to wait in TUI to sit down to speak with Georgia, who was the lady who served me, to book my holiday. It's rammed, and it really frustrates me because it's the same people that will spend money, you know, just mind-numbingly on shit, let's call it what it is, and then get home and go, I have no money for gas and lecky, and I
Yeah.
can't afford anything. And I'm like, because you have poor financial habits. You know,
Yeah.
it's quite frustrating, isn't it?
I think this comes down to one, education. You know, there's good debt and there's bad debt. If anyone here's read Rich Dad Poor Dad, they'll know exactly what I'm on about. And by the way, that's the book that literally helped me grow my business and give me the confidence to do it in the first place. But really understanding the concept of money and debt, and also going back to this lifestyle thing, you know, ask yourself why. Why do you need that designer handbag? Why do you need to go on holiday to Dubai or Mykonos or wherever it is? Is it driven by social media? You want to go to the bars, the clubs everyone else is going to and taking the photos, etc. You know, it all comes down to why are you doing something? Do you understand what you are doing? Let's take, for example, someone who takes out a personal loan and they renovate their home and then they resell their home for profit. That's an example of good debt because that debt's allowed you to generate more capital. So, you know, I'm fine with things like that. But in general, people who overspend or, you know, bury their head in the sand when it comes to money tend to be the people who are less educated on that side of things. So they're not as interested in learning how can I manage my money? How can I invest? They think investing is really complicated. I can tell you that it's not. I started investing a while ago. I just used trading 212, invested S&P 500, and just dollar cost average into Bitcoin. Those are some of the things that I do. It's a very, very simple system. But I think once you get into those habits and that mindset, then that's when things will start to change around. Also, having multiple streams of income is useful. So you could use those multiple streams of income to pay for your holiday, rather than getting in debt. And also, like, guys, if you are blasting the credit cards and living beyond your means, it will catch up with you. And guess what? Like, people, like, companies know this, so they know, like, people actually spend more when they're told, "Oh, we're in an economic downturn crisis." That's why you're seeing more people in the supermarkets, more people going on holidays, etc. Because that desire is driven further. If they've been told you probably won't be able to afford this, and then they're like, well, if I get this credit card, I can still do it. So that's what's driving that decision. And companies are profiting from it, and banks. The interest rates for loans, credit cards, they're high. So yeah, be careful about what you do when it comes to taking out finance.
Mad. This needs to be a curriculum, but it never will. But it never will be because this is awareness. This is
Yeah,
awareness, and as you said, it's education. It's rewiring the hardwire of what you've been brought up. And I think also what's a real shame is there are some parents that were never educated themselves in finance, and you know that sort of goes down to the children. And if those children never really learn about finance, then this vicious cycle continues. And I'm sure you are as well, with your little ones. But you know, like with my son, really up to scratch on finance. And you know, when he gets pocket money, let's make sure we sort of divvy it off and have a good understanding of it. And I think again, we're fully aware that's not going to be taught in schools. We know, as you said, there is a wider agenda to why it will never be taught in schools, and maybe why these tax changes are so harsh at the moment to keep employees in a job rather than think about entrepreneurship. I do think, actually, just on that quickly, I do think you are absolutely right. I think that definitely is the bigger picture here, because social media, what it has done, although it's fucked a lot of people up, let's say it as it is, Also, it has brought a lot of awareness to people going, why am I being spoken to like an absolute div at work? When if I put a bit of work into myself, I could replace the basic income. You
Yeah.
know, people are more aware of actually entrepreneurship might not just be for the West Wing silver spoon babies. It's for everyone.
So my opinion on social media. So I'll tell you a little story. So I, back in the day, had a personal Instagram and a personal Facebook. And this was when I was employed, right? So I'd sit, scroll on the night, etc. So my kind of story is I got pregnant with Darcy, my second daughter, and I was employed. And the maternity pay, I looked at policy, it was shit. And I was like, how are we going to survive with two kids, me on maternity? It all happened really fast. It was a really urgent situation to be in. So I sat and thought, well, I could just do some bookkeeping or accounting on the side, a bit of tax work as a second income stream. But what happened with me is as I started to read more books, get more educated, so I use YouTube quite a lot to learn about business and things like this, and then podcasts and what have you. What I found is that I just didn't really use my personal accounts anymore, and eventually I deleted them because occasionally they would be a distraction. So I actually think social media, in my opinion, it's just my opinion. It should just be purely for business. I don't even think people need a personal account because guess what? Your friends will have your phone number or your WhatsApp. They'll call you, text you, whatever, if they want to meet up and chat to you. You don't need an Instagram or Facebook for that. But what you do need is those platforms for business because that's how you engage, that's how you get your message across, and that's how you know, start to grow your business and leverage the wider audiences of the world. Because even for me, I've done content now for years and years, and we were saying this earlier offline. I am now seeing the fruits of that labour. So I've actively been out networking, met people who are a lot higher up in the entrepreneurship world than me, consistently putting out content, etc. That is now paying dividends. So my advice to somebody starting out would be get rid of the personal accounts, or if you don't want to delete them, just stop using them, uninstall the app or whatever it is. Focus on building out a business page and having your face on videos, and just get talking, and people will start to talk and work with you.
100% aligned with you there. I've spoken about this a lot. I have no fucking idea why people want to post a photo to show the world of them on a beach or them doing something mind-numbing with no value. With no value. And like, I'm sure you've seen it or maybe you've heard it, but when Ed Sheeran did that quote, I see a lot of unhappy people pretending to smile, but really they're just deeply saddened. And then Ed Sheeran was talking about I just use it for marketing to launch all of my albums, all of my songs. And that's the thing. I've even turned around and said the same thing. If you want to take a
Yeah.
load of photos, put it on a fucking SD card and stick it in a drawer. Because no one
But
cares.
I think this, obviously going a little bit deeper now, this comes down to validation.
Yeah.
People want validation. They will put a picture up of them at a beach in a bikini or topless or whatever it might be. They want people to like that photo and comment on it. So they will then get an endorphin hit, dopamine hit off that and say, I feel better now. Um, but actually, if you can convert that energy into business world, that's where the money is made because you're still going to get some kind of dopamine hit from somebody commenting on your business page saying you are amazing, or whatever they're saying, or that was really useful, Aaron, thank you so much for posting that. I guarantee like that's going to make you money, not posting selfies or whatever you're doing on your personal Instagram. So yeah, I just that's
I'm
my view
right.
on that one.
I'm right there with you. I think we've got a lot of damaged people on social media at the moment where they are you hit the word is validation. People are looking for approval. They don't feel good enough. They're trying to keep up with the Joneses, but we're all fully aware the Joneses are broke. And everyone is trying to look like they have money and they don't. I think taking it to the core, I do a lot of talking about this, but people don't really know who they are. They're not content. They're hitting midlife crises in their 20s. You know, they don't really know what they want to do. And going back to what you said, especially financially, they don't know their goals. There is no, SMART, the acronym for SMART. There is no specific measurable, time-bound goals because they don't really know what they want. And again, unfortunately, it does come down to a lack of education. And I think it is a real shame that, again, I'm there with you in terms of you don't need a private account, because if you have a private account and it's just personal, it's all about you. It's a vanity metric. There's no value, there's no information, and there's no cash to be earned. So I think you're absolutely right. I think that's the thing, right? Is when you start looking after your money and you can value money. I think there's a real difference to someone who's very savvy with money. They don't need to look like they've got money, but they really respect it and value it. And I know I have that because of my upbringing. My parents didn't have any money, so now any money I do obtain, I really value it and nurture it. And I suppose you work with a lot of clients. Can you identify the ones that just splash it and have the
Yeah.
bad habits, and the ones that really want the longevity and the wealth of it?
Yeah. The ones that tend to splash the cash um are guilty of the social media element. I see some of it. If they're following me or following them back as a client or whatever it might be. Um, Also, some clients are just so eager to save so much tax so they can just spend more. And then you tend to see that come out in socials, or they tend to be a bit more reactive as well. So they might watch a video on TikTok by someone saying, move to Dubai now, it's tax efficient, blah 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 blah. And they're literally like calling me up, oh, we need to do this, blah blah blah, I'm gonna have more money, etc. Actually, no, just stop. Is it the right decision for you? Um, you know, there are people out there like that. I don't think you'll ever stop that. And I do have some clients who have some characteristics like that. But majority of my clients are financially savvy because they're already in property. So as you know, I specialize in the property tax side of things. So actually, number one, if you have a buy to let property and you haven't inherited it, you will have had to go through some kind of financial mindset shift, training, whatever you want to call it, because who would have stumped up that deposit? It was you. How did you do that? You saved money or you invested it elsewhere and then invested it into property. So actually what I find is the majority of my clients are pretty good on that side of things. But we do get the odd one or two, perhaps they've been sold on a rent to rent course or whatever it might be on the property side, get rich quick schemes. So anyone who's watched videos like that and then they come to me, they are a completely different person to someone who has saved 25 grand or 30 grand and then gone and bought a property and done it up. So there's definitely a massive difference there.
I think there's a rule of thumb as well, right? Is when any decision comes to money, you just said the word, is not to be reactive. I've
Yeah.
seen it so many times where, isn't it? And again, I'm going to tie this in, but I do find it fascinating how so many people are very influential, or they're influenced easy because of their lack of education. They might go down the pub, talk to Dave and Barbara. Dave and Barbara have gone and bought EasyJet or Tesla. And then Tony, who's been listening to him, he's convinced he needs to go home and they'll buy Tesla and EasyJet, not taking into consideration his circumstances, his financial situation. And that these people who are very easily led, that's quite dangerous, really. And that's how these, when meme stocks were like floating about, that's what
Yeah.
happened there when you had an influx of just naive individuals who just jumped on a bandwagon that was literally just heading towards a fall off a cliff. Again, it comes down to education, and I think just slowing down when it comes to finance, isn't it? Like slow the decisions down. I think that really helps. I've been quite slow with my financial decisions, like you. I just cost average in everything that I do. I've never handpicked. I don't handpick anything. I just cost average what's worked before. It's a good way, right?
Yeah, I think unless let's say you're an investment banker or you're someone who works within that field who's got extra knowledge on it, just don't overcomplicate it. Look at Warren Buffett, look at that model of your dollar cost average in, you put £20 a week into S&P or Bitcoin or whatever it might be, whatever you choose to invest in, over time, you will see returns on that because history shows that. So I think the key for people, if they do want to start investing, is to not overcomplicate it, and just have kind of an automated system as well. So say like when you do get paid, the first thing you do is move the money or some of the money to your investment account, and then that automatically invests it for you in the S&P 500. Then you go and pay everything else. I think that principle of paying yourself first will pay dividends, pardon the pun, in the future. Because I know, for example, if I had a month where I didn't do that, me and my family, we would just sink that money because we've got two young children, maybe go and have another day out or go out for a meal, etc. That money would just be gone. So I think actually just invest first and then sort the bills, sort childcare, or whatever that is. And it doesn't have to be a massive amount. I'm not sure if you've spoken about this on your podcast or YouTube, but there's this FIRE number going around. So people that want to be financially free, they have to hit a certain number. And then in order to actually get to that number, it can be like, oh, you've got to invest £1,000 a month. Bearing in mind that the average wage is 1,600 after tax. That's obviously not realistic for somebody on that wage. But even if you could invest 10% of that amount over the years to come, the next 30, 40 years, that will be a considerable amount of money, and way more than if you put it into a savings account on the bank.
I think setting up those standing orders, getting the money straight into some form of investment account straight away, so there's no emotion involved,
Yeah.
is super important. It's funny, I have spoken with people where I've said, are you investing? Are you doing this? What's your situation? And they're like, no, I don't really do it. I haven't got the money to do it. And I'm like, could you do £1 a week? Well, yeah, I could do £1, but what's the point? Yeah, but you're not even doing £1. You're not doing £1. So the pound is the point. And when you
Yeah.
can do £1, you can do £2. And if you buy a coffee a week, you could actually do £5. And lo and behold, again, we're never going to save the world. I've come to realize you can't save the world. You can't take a horse to the water and make it drink. It is deeply rooted, some of these issues that people have, that they never seem to want to save their own life. But everyone can be investing £1, everyone can be investing £2, and then you can creep it up on the compound effect. What tips would you give people for this year and onwards, and all these dramatic changes that we seem to see monthly? What kind of things can people be doing to try and just pocket a little bit more money and be a bit more savvy, like even if it's just resources or things to keep an eye out on?
I would say number one, make sure you're in the business structure that's right for you. So if you are someone that is looking at going back to sole trade, get your accountant to do the numbers to make sure that is the right decision for you. If you are someone who, is operating in a limited company, there may be other tax efficient structures that are available to you, such as group structures, etc. So have that conversation with your accountant or tax advisor, number one, to get that structure right, because you need the foundations to be there and be correct in order for you to flourish. The second thing I would say is make sure you're maximising from a tax perspective as much as possible. So maximise all of your expenses, everything that is like dual purpose. Make sure that's accounted for in the business accounts. Make sure you are making use of, you might have one mobile phone, it might be paid for by the business. All these little things add up. If you're in a business, a limited company, you can get trivial benefits. They're worth about £300 a year per director. So if there's two of you, husband and wife, or boyfriend, girlfriend, that could be £600 sitting there waiting to be taken out of the business tax free. So have that conversation with your accountant. Make sure that you are claiming everything that you possibly can. Be aware of the reliefs as well. And I think just generally, one, try and be tax efficient. And of course, I'm going to say that as a tax lady. But two, just ask yourself the question of, what is my number? What's going to allow me to do the things that I want to do, and work back from there? Because you might be surprised that it's not 10K, it might be 5. And that goal is a lot more achievable and closer to you than you think. As a result, that will motivate you to get out your job, grow the business, do the extra hours you need to put in to get to where you want to go.
Great advice. Great advice. And it's funny, I think of Matt Fidesz, who I interviewed most recently. He scaled sort of his empire up, sort of 150 million plus, whatever it is now. And he said, if I could go back now, knowing what I know in hindsight, I'd have stopped at 10 million. When I was making 10 million, I'd have stopped because I had everything and there was less complication. So I think, again, just saying for anyone else, know your number. I think that's really important takeaway from this podcast is knowing what you want. Because again, I think social media has just confused the living daylights out of a lot of people. Amy, if people want to sort of poke their head in, find a little bit more out about you, where do you want them to go? I'll include it all in the description, of course.
Yeah, sure. So I'm on Instagram at Property Tax Queen, or you can find me on LinkedIn as Amy Richardson, or you can reach out to me via email, which is contact@flowxadvisory.com.
Amazing. Well, Amy, second time round. Thank you so much. Loads and loads of value. Hopefully, everyone who was on the live as well, and anyone who's watched up until this point, thanks so much. Do go connect and follow Amy on socials. And Amy, until the next time in the future, I'm sure we'll hit a part 3. We have to make it a hat trick. Everyone, thanks so much for watching. Amy, thanks for joining me, and we'll see you all very soon.